Good day, T. Travis. Got my green tea going this morning. Hopefully it's going to be a magical Monday. The feds are looking at voting on the rescue plan this morning, and should have an answer by the end of the day, if not sooner, midday. There's some good changes, and it looks like our Congress actually made some good decisions this weekend, both on both sides of the political party, which is amazing right now this time of election year, and they got something done. It looks like there's some good features in this bill they changed. It's not going to be $700 billion bailout like initially planned. It's going to be $250 billion initially, and then $100 billion more readily available at the president's discretion. So that's all it is at this point. And there's also some great wording they use in it. Specifically, the main concern was these golden parachutes for these CEOs that are walking away with millions and millions of dollars. And so they're definitely going to crack down on that. And if they, for some reason, feel that their projections they gave are not accurate, they have to pay back money. So it's pretty interesting. Also, a good portion of this is going to be the government insuring loans rather than buying the loans. So that's a big difference. It's similar to FHA. FHA is not a loan. It's actually an insurance. And that's what the government's going to do. They're going to insure these mortgages and keep them with the companies that are still in business, rather than taking on mortgages and having the government become a mortgage company. So that's great changes they made in the bill too. So exciting stuff. The mortgage-backed securities have responded well this morning. They're up 56 basis points, so that's a little bit over 0.5% in fee on a mortgage. So again, $300,000 mortgage, we're looking at $1,500 savings. So that's great news there. But I caution you, because I'm ready to pull the trigger for some clients if the market shifts when this bill passes, because when the bill passes, right now the Dow's down 281 points. And so if this bill passes, it may cause money to come out of bonds back into stocks. So I wouldn't be too happy with this jump yet, because it may be gone by tomorrow. So if you have a loan, I might consider locking in, depending on what happens here. Also, in foreign markets, the LIBOR, the London Interbank Offered Rate, it's frozen basically. Banks are not lending to each other in Europe right now, and they're too afraid to. They don't know. They're hoarding their cash. They're holding on to what they have, and I guess I can't really blame them. But it's really caused just a breakdown in trading between banks. And so the analysts expect, once this bill is passed and this liquidity and this $250 billion injected into the markets, we will get some liquidity again, and then the banks will start trading between each other. Also big news this morning, another reason for the stocks plummeting, Wachovia was purchased and bought out by Citigroup, because Wachovia, as we know, struggled. FDIC stepped in, and there's a $42 billion loss Citigroup is taking on, a $42 billion loss of bad loans that Wachovia has, and they still have $312 billion in mortgages under their umbrella. And unfortunately with Wachovia, they're pretty much a subprime Alt-A. They're really known for that in the market type lender. And so I'm sure that a lot of those are still going to default and go bad. And FDIC has stepped in and said they're going to guarantee an additional, I think it's $20 billion, FDIC will, to ensure the difference in the loans that go bad. But they also get preferred stock. And so it's just unbelievable, unprecedented times right now in the market with all these deals going on. And the government may actually make out okay, because the economy is going to turn around. It's a cycle that we've been through several times before, not quite this bad other than the Depression. But the reality is that the market will come. We all know it will. And I think the government is in position to make some money on these deals that they've bailed out these billion and billion dollar 100-year banks. So interesting times. Also, the PCE, the Personal Consumption Expenditures report, came out this morning. The core number, which is what the feds watch for inflation, and it came in hotter than expected, and it's at 2.5%. The feds don't like to see it above 2%, and this is the hottest reading since 1995. So actually it's 2.6, I'm sorry, not 2.5. So it's a big jump. So other than that, we're going to keep watching. Again, I'm watching, and the stocks are jumping around right now as I record this video. But I think throughout the day we're going to watch some market moves. And so I will update you guys again and do a second update if I need to today. But the reality is, until this Fed plan comes out and then it's voted in, I think finally we'll have some stability in the market. And I think by the end of the week we'll have a good direction of where we're going. So if you have any questions, give me a call, and I look forward to serving you, and be blessed.